From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 21st, 2016. In a moment, we'll be taking a look at the AUDUSD, the Australian versus the US dollar. But first, recap a couple of trades made over the past few days. First off, here on the USDCHF, yesterday's morning's analysis video was suggesting a buy into the support zone, the pink shaded area that you see here in the middle of the 4-hour time frame for the US franc. You can see that pink shaded area right around the parity level, 1.0. 1.0010 is the top. 99.90 is the bottom, and you can see the market settling down into that area as support yesterday, giving us opportunities to go long into the 0010 or even as deep as the 99.90s here for the US franc, and we had traders in that entire zone taking buys. So depending on where you enter it will depend on how you manage the trade and also the profit that made. If you got in at 1.0010, you potentially got knocked out at break even on the dips lower. If you got in a little bit lower, maybe you were able to stick with it. You might have even gotten in a second or third time as the market dipped down here into the 1.0010 level. So all in all, we saw a profitable opportunity yesterday. We'll just call it from 1.0010 up to the green shaded area. We're looking at about 45 to 50 pips of profit as it pushed into the green zone. Still sitting in the 40 pip profit zone right now. So if you're still in it, protect profit, move your stop to break even or better. Maybe even close some profit as it sits here into the green shaded area. We know that the pink and the green zone are very important right now. If it breaks the pink zone, we look for it to go lower, staying above it. We're seeing support as we have. Green zone resistance as we've seen for several days now. Over time, if we can break out above that green shaded area and the 1.0070, 75 level, we'll likely look for a continuation of the uptrend channel that we've been studying here, the rise of the trend channel, a break of the green zone. We're all the way back up here into the 1.0100s, possibly the top of the channel, the black trend line, which is up here towards 1.0200. So definitely some upside bias right now as long as it's above the blue trend line and we see the rise of the channel. We're looking for the market to continue to pressure higher. Today, if you're looking for a new opportunity today, it either needs to dip back down towards the pink zone or break above the green zone to go long. No reason to go long as it sits underneath the green zone. So it needs to dip or break the green zone before going long again. No reason to go short. On the other side of this, the euro dollar, we are also looking at this during the live trade room yesterday. If you were in the live trade room, you note that there was an opportunity to go short here into the orange shaded area as well. Just the opposite trade of the US franc that we were just looking at. You can see it bouncing between the orange and the yellow shaded area over the past several days. Similar situation. Selling the orange shaded area is a possibility with the range and the channel that we've been studying in the live trade room. Breaking underneath the yellow shaded area becomes an opportunity to target back down to the green shaded area, that wider range that we've been studying around the black box. I don't have any really reason to go long right now. Of course, in a couple of minutes we have some news out of Europe, the ECB press conference. We have some U.S. news, Philly Fed, and unemployment claims coming up at 8:30, about 45 minutes from the recording of this video. So definitely some things to watch, but definitely have a little bit of a downward bias. We'll see what the ECB has to say in just a few minutes as well. Well, at 8:30 is that ECB. Just a few minutes is the bid rate. But just continue to watch this pair. I still think going short is still a possibility. For today's analysis and trade opportunity, I'm going to go back over to the AUD. You know, Australian, New Zealand dollar, we've made some good money on these two pairs over the past few weeks. I got into the Australian dollar yesterday afternoon, was able to see a little bit of profit, came back up, tagged me out at break even. I still think going short underneath the yellow shaded area, the 6,900 or 69.20 level is still an opportunity. That's a multi-year low that we had over here on the left-hand side. We're now underneath that, using it as resistance. So for the day today, that same multi-year low, and let's go ahead and zoom out to the weekly. Here's what I mean by multi-year low. Look at the bottom red trend line. Look at down here at the very bottom of the chart. That's that last low. We're underneath that right now. Now let's go back down to the daily. There's that low at the bottom of the red trend line. We're underneath that for the past 1, 2, 3, 4 days now. We've held underneath that yellow zone, just like the pink zone up here. Remember that? We were selling that last week, making money on the way down. So the same thing goes here into the yellow shaded area. Selling 236 fib, but the most recent leg of the downtrend sits at 69.45. So again, that gives us a clear way to assess our risk. Potential profit targets, of course, first targets would be the blue shaded area. A breakdown of the blue shaded area, we'd look for it to continue that downward pressure. First off down here into the 67s, but maybe even much lower if it gets some strong momentum back down into the 66s and the orange shaded area, green lines at the very bottom of the chart. So selling the yellow zone, main focus for the day today. 4-hour time frame, you can see we're very close to that right now. I actually have a sell limit I just put on a few minutes ago at 69.20. But I think as close as possible to that yellow zone is still a good opportunity, even if it doesn't reach all the way to 69.20. We just don't want it to break above there. That's the risk in the scenario. Your stop losses would likely be somewhere up here right around the 69.60 to 70 level. Just above the last two spike highs is a good idea to place your stop loss. 69.60 to 70 into that range would be your stop loss. You're looking to target back down to the blue zone. The last time we did this, we sold it at 30. We were able to capture 100 pips of profit back down here. So I don't know if we'll see that kind of movement or even more, but definitely looking at the yellow zone. The risk above it, because if it breaks above it, we're probably looking for the market to take a turn back to the yellow shaded area. So for the day today, selling under the yellow zone, targeting the blue zone. The risk is the break of the yellow zone, which would likely see it go higher for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.